Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 17th, 2019. It's 10 o'clock, a little after 10, 10:06 Eastern, and I just wanted to get this video out. I didn't do a charts I'm watching this morning because it's so much of the same. The main thing is I'm watching the indexes, those trend lines. We're going to get to that in a second. I'm starting the video now because we've seen a sharp reversal on the markets. Don't want to get excited about it yet, but it is, again, something worth monitoring. And I've said this in recent videos, and I've just been through this kind of market so many times where you give up on everything, and the market just goes to a slow grind. Whether it's usually you have a slow grind upwards. Downward grinds are usually in the market. The corrections are fast. You usually don't fall asleep at the wheel to the downside. It's usually to the upside. So let me get to the broad markets, and then I'm also just going to throw out a lot of just some of the things I'm watching, kind of do a charts I'm watching. Here's one. I've mentioned this recently, Tandem Diabetes Care. This is a stock we were bullish and long on back here at the lows, and it had just a hell of a run since then. Would have been nice to have just tucked that thing away and trailed up stops along the way, which is actually what I said back then. I said trail stop up. Set it at one of these points. Again, I covered that already. I think it was here at the yellow line. So had you done that, you would have been long up to this point and had that. It's a 3,400% gain off that low right there back in early 2018. Now, point being, it had come full circle, and that's what I said. You have an uptrend line here, this well-defined uptrend line that broke down, but what I often say is when you have two support levels in close proximity, you always give the benefit of the doubt to the second of the two to break, especially when a stock is in an uptrend. And what we had here, besides the uptrend line, is a gap. Now, gaps are always technically significant, and the bigger they are, the more technically significant. This is a very big gap, and I don't know if you can make it out on the volume price histogram, but you have virtually, you don't have any trades through there at that time period, and that's what makes it. That's why stocks tend to fall so fast when you enter a gap. There's no support. Nobody's traded in that range, so the stock tends to backfill the gap, and that's most likely what's going to happen here with Tandem. So kind of, it's down already now 9% on the day, but again, I think a lot more downside to come. I already shared my targets a few weeks ago, and I put this chart up. Sorry, these are all over the place right now, but so there's a gap, and again, what happened is it broke down, and the breakdown that day was fairly impulsive right here, but you can see we ran in and hit the top of the gap, and we've danced along it since. Finally gave it up today. So there's Tandem. That is a sell signal. My first target was and remains, I haven't made an official trade, so you want to maybe cover a couple pennies above that, 52.24, and then T2 and T3. Again, when they're unofficial trades, I'm just showing you the actual support level where I expect a reaction, and it's best to cover a little bit above that just to avoid missing a fill should it reverse. So there's Tandem. After the video, I'll take a look and see if I want to go ahead and add this as an official trade. I've been averse to putting official trade ideas because it's been very tough. The the sectors that I've been focusing on are those that have very little, if anything, to do with the broad market, and this certainly fits the bill. Shippers is another sector. Now, the problem with the shippers, I didn't list those as official trades. A lot were aggressive, and B, more so, I like to take a shotgun approach. Let's just look at those real quick, and then we'll get to the broad markets. Here's my list of the stocks covered. First of all, when I go through a sector, and these are by far the majority of the trade ideas on the right side of the chart are unofficial trades, because I'll find a sector I like, but then I'll drill down and cover the top dozen, maybe 2 dozen names that I like within the sector. Sometimes a little less. Like in the auto part makers stocks, I picked just 6. The 6 that I was focused on, those look good, and every one of them's up and done well since then. Shippers, same story, but I take it's even more so important in my opinion to diversify and take a shotgun approach. Therefore, I can't list a dozen official trades of these stocks as official trades. Just take the ones that look best, and as I go through the videos, they all have different breakout points. For example, here's Star SB Safe Bulkers up again another 6% today since the breakout. 17%. This is Star Bulk. There's the breakout, and a lot of these stocks are doing well. Now, keep in mind, If the broad market rolls over, what's going on is these, and I've traded this before, as I've said, these are momentum stocks. Momentum players are on the field right now. They're playing ball. The game is on. Now, that game can end any time now. And because these are risk-on trades, if the broad market were to suddenly reverse, and we're going to get to that in a second, QQQ and XLK breaks those trend lines I'm watching, and most of the FANG stocks break down, well, all of a sudden then you have a risk-off market. And you won't be able to get out of these stocks fast enough. So just don't become complacent. You know, here's another one that was highlighted again. We're talking about a 17% gain in just a couple weeks, but that 17% gain can get taken away in the blink of an eye. You just look at these candles here. When the momentum reverses, you can see these stocks can fall just as fast, if not faster, than they rise. So music's still playing right now in the sector. So you want to trail stops up, book profits along the way. There's a lot of ways to trade these stocks. Just, you know, and they're all different. I'll have to do a complete thorough update. I didn't want to put a price channel up there. I'm just trying to show you, if you want to are curious as to where an objective stop would be. Well, there's a reaction point right there. We had some consolidation. So on that one, you know, you can do a tight stop, but the daily grinds can take you out, or put a stop below the previous reactions. Again, there's many different ways, and it all depends on where you entered, of course, as well. That's another factor in your stops. That's why there's not a one-size-fits-all for stop loss suggestions. LPG flagging there, gas. I don't want to go over all of these. I did a recent update on the shippers before, but there's another one. Looks like it's breaking to the upside. But more importantly, let's get over to the broad market real quick. Let's just go there. This is what, if I can, I think most of this chart's covered here. I'm trying to squeeze it in. I have a much larger monitor that I'm trying to compress this mosaic of charts down. But the ones I'm watching down here in the corner are, you can see NQ, ES, and RTY. Here, let me box these in for you. All right, so we have the three big futures I like to watch here and trade. NQ, ES, that's the NASDAQ 100, S&P 500, and the Russell 2000. So this morning, shortly after the open, I saw a very sharp drop in both ES and RTY, large and small caps. These are, by the way, 2-minute streaming charts. So you're going to see the before. This is what happened this morning in pre-market. And I said this as well. There was a lot of buzz about Netflix, about the futures going to all-time highs. I said, you know, wait, especially with Netflix and stocks that report earnings, wait until the starters step onto the field, the big boys. When I'm talking about institutional players, they don't, they can trade, but most of them don't trade, and a lot of them can't trade in the after-hour session. Why? The liquidity is not there. You can't move in and out of big positions in a market that's not very liquid. I don't know, maybe some of you watch the show Billions on Showtime. The last episode Sunday night, you know, Axe, he crushed this, you know, kid who he had, you know, put through school. But the kid was running a smaller hedge fund than his. Axe Capital, he runs a big hedge fund, multi-billion-dollar fund, and this smaller, more nimble fund. And they talk about that, and that's how trading works. You know, the hedge fund manager didn't want to move up to a larger based fund when you have a lot of capital. Why? Because you can't be nimble. You can't move in and out of stocks like we do. That's the one advantage we have over the big players on these stocks, like just what I was talking about a minute ago, the shippers, for example. All of those stocks, those are micro, some of those are nano caps, or micro caps, or small caps. And a big institution to take a position that's worth their while, you know, 1% or more of their assets, they have to take a stake that is so large they would run the price to the moon trying to get into the stocks. They'd run the price up so much with the buying pressure, and then they're trapped in. They have such a large position. The only way out of that stock without crashing the price, trying to, you know, get out of their position, is they need a lot of liquidity. And they will do that at times on the smaller stocks, but they get in, they get out, and they're usually selling into a buying climax. But my point I'm trying to make here, sorry, I'm digressing, is the this is what happens, you know, after 9:30 p.m. once the market opens. Then the institutional players, you know, the funds would, you know, run billions of dollars. Those are now on the playing field, and so you can see what happens. So all those pre-market gains, that's the retail trader, smaller traders bidding up the market, doing whatever they want, and then for whatever reasons, maybe there was some news headlines, I don't know yet, honestly. I haven't even bothered checking. It doesn't matter. All that I wanted to point out is that I rarely see, and I said it at the time, in fact I posted a chart when this started to happen. We started to have this sharp reversal in RTY and even ES. Now, more important, ES. RTY, the small caps, those are the risk-on companies. When it's risk-on, people are buying tech stocks. They're buying NQ, tech stocks, and RTY. That's their go-to because it's just more juice, more bang for your buck. And when the tide turns, those two go down more. But what we saw here is ES was dropping sharply as well. And at the time, here, let me show you. I have a chart here somewhere. Okay. Here it is. So, you know, as quick as I could, I tried to put this up. This is unusual to see, like I said, such a sharp drop in the other major indexes, small caps, especially the S&P 500, with NQ hardly moving. You know, NQ should have looked something like this. These are all on scale. They're all same time periods. You can see, you know, starting Wednesday. And so anyway, so now this one, and as I did say, I favored, you know, I figured it would play a game of catch up. There's, you know, this is very impulsive selling. So now let's look at the charts and see really, does it mean anything, or is it going to be more intraday noise? Here, let's get rid of that. Let's put up this chart here. You can see what it looks like for you IWM traders. Here, let's go through this. I don't have this one marked up yet. There it goes. Okay, so like I said, I'm kind of all over the place in this video. I just wanted to get it out there because I'm seeing this movement, and I didn't do a charts I'm watching yet today. So those are some of the ones I wanted to mention. Shippers, still momentum's there. The indexes right now, we have those sharp reversals today. 60-minute chart, big bearish engulfing candle. Now, I did make this comment to somebody. They asked me in the trading room, Randy, what do you think about that last 60-minute candle in NDX yesterday? Here, I'll show it to you, NDX. So this was my reply. There's the 60-minute candle. We'll look at here, QQQ, same thing. So there's the 60-minute candle from QQQ yesterday. And it doesn't mean much to me. Now, you can see the big tail, the reversal, but my reply was this. For weeks and actually months now, we've seen a lot of what were clearly bearish candlesticks on the 60-minute time frames. We've even seen breakdowns, you know, of trend lines. This is just one of many I have here. This is a busy chart. But we've seen rising wedges and other trend lines and horizontal support levels break. We've seen follow-up selling that was impulsive. But what happened? One of two things. They either proved to be just immediate whipsaw signals with the market rallying back up, or they started to play out for a correction, but a correction that fell well shy of what the measured target for the chart pattern was, or what you would expect from such a breakdown. So what is my point? My point is, okay, we need to stop at this time putting so much, or I need to, putting so much focus and emphasis on what goes on in the 60-minute charts, and I have stated that recently. I've said my focus is really on this daily chart right now. A couple weeks back, it was on the weekly chart, and we closed, remember, we closed above that level on SPY, and I said, look, unless we fail, you know, you can only take that as bullish. Doesn't mean I'm going long. Instead, I wouldn't chase it. And we haven't really gone up a lot from there. It was at 282-ish level. We've inched up, but here's what what I said at that point in time is, look, that pretty much took off a lot of shorts off the table in the whole shorting thing until we get some solid evidence, because now the S&P is above, you know, still above that key level, and most importantly, lately at least, I'm focused on these uptrend lines. So we can see SPY is right on the trend line. QQQ tested it the other day. SPY tested it. There's that uptrend line off the just there it is. And remember, it's a daily candle, a daily chart, so it doesn't matter intraday as much unless we get a very big intraday candle, the type that has a very low chance, something like this. That might be your early sell signal there. So that's what I wanted to make mention. And look, we can take this line now and I can drag it a little bit out. You know, can play with that trend line, give it the benefit of the doubt, and that's what we need to do. If this market has taught us anything, taught me anything, is that give any of these sell signals, or yeah, give it the benefit of the doubt, because the trend has been very resilient, and most sell signals, if not all, have proved just to be whipsaw signals, fuel for the next leg up. So there it is. And so here it is on QQQ. Again, pretty sharp reversal this morning, but what has it done technically? Nothing here on the daily chart. We're still well above that trend line on QQQ. And now let's just look at the futures and look at that. NQ, well, it took us back to the trend line. This is that same trend line I had showed late heading into last week, and I showed it earlier this week. We had a brief breakdown here. There was a whipsaw signal. I talked about this one recently, but remember when this happened, and that looked impulsive. It was impulsive, but when it came down to it, that level right here, you don't see it on this chart, but that was the primary uptrend line on the daily chart was hit. And as I always say, I always give preference, much higher weighting to the longer term time frame. Daily charts take preference over 60-minute charts, and this is a great example of that. So you had a breakdown on the 60-minute, and had the daily charts confirmed, that would be a great sell signal. However, they didn't. This breakdown took prices down and then made a perfect test of the uptrend line off the lows on the 24th, and so therefore this breakdown was just a whipsaw signal. It's still a level worth watching because we have a lot of reactions along there. And again, we hit it again today, so maybe that was another buying up. We'll see. But so far we continue to diverge. Nothing has changed, so this is why you have to be careful. I don't like buying pullbacks to trend lines when the charts indicate that one of those trend line tags will likely be followed up with a breakdown. And this is what tells me that these divergences, everything else. Maybe it comes, maybe not. But if you have an uptrend line, in a clear uptrend without divergences and everything is healthy, price action's healthy, you don't have a lot of red flags like we do now, then you buy the pullbacks to support. Otherwise, you look to position short if you get a solid break. But again, it will take a big red candle down through here, maybe a few red candles to give us that sell signal on the more important daily chart. All right, so that's that. ES, here's the same trend line from last week and earlier this week. I'm going to extend that out. So we didn't take that one out yet. I added a minor trend line this morning right here, and I mentioned earlier today we were at that trend line. We broke it today so far. Again, it's a very minor trend line, not a lot of reactions, so I'm not putting a very heavy weighting. It's worth mentioning there. If we maybe stay below it or back test it and reverse, maybe it has a little more validity, but this is a and even this trend line doesn't have a lot of reactions. It's one I'm watching, and I do think that if it breaks, it will probably take us down to any or all of these next support levels down below. But as of now, I guess the point I'm trying to make is I just showed you SPY is on support on the daily. QQQ is still above support, and even here on the 60-minute charts, despite this reversal today, it hasn't really done anything technically significant as far as sell signals go, anything like that. Now RTY did. Here's a trend line that I had on RTY, and that was just smashed through today impulsively. That's a big red candle. I don't see a candle like that until we go back here. We had that kind of waterfall sell-off. I had support here at 1575.50. Remember, and this is RTY, the S&P 500, or excuse me, Russell 2000 E-mini futures, and they don't trade they trade in quarter point increments. So 1575.43. It's just where I drag these lines. That's what populates those values. I don't know why they don't auto snap to the nearest quarter point, but either way, we'll call that 1575.50, and we're just a hair below it. But again, on a 1500 point index, a point isn't that much, so you can see we're essentially on that support level now. If that goes, I could tell you there's some minor support right about here, 1560 or so, and a little bit better support there around 1552. Keep in mind, I doubt that RTY is coming down here if QQQ and SPY or ES and NQ rally up from here and go on to break out the highs. So it's unusual as it is to see such a sharp disparity intraday, but not unheard of. There are times where the small caps and the large caps kind of do their own thing and diverge to some degree or another. And remember this too, is that the small caps, QQQ and SPY are challenging or trying to run at new highs, but small caps are still very, very much off their highs from back in 2018. In fact, at this point, they're still down, 10% off those highs. Okay, and just to wrap it up again, I'm just looking, the things that I feel comfortable being long have nothing to do with the broad market or very little. These are usually not your top components of the S&P 500 or NASDAQ 100. A lot of these are small cap stocks. So here's BWA, and these are, I'll just hit the 6 auto parts stocks that I've covered recently. This one just continues to move up. When we took out the downtrend line, there was a first buy signal, then we hit the neckline of the inverse head and shoulders bottoming pattern. Then we took that out impulsively with a gap up, and it continues to move higher. So again, momentum is here, and this is a sector that is doing well, especially as long as the broad market holds up. This one looks to still be headed up to my target there of 46.53. The other ones were ADNT. I can't remember where I mentioned it, but I believe it was back here. I mean, a lot of these stocks are up well into the double digits. This one's up over 60%, and now it's hit my, remember, I had an intersecting target area here. They come in close together, 25.33 or the downtrend line. That's the bottom of a gap. If you're in this one, this is a good time to take profits. If you like the momentum and you want to let it run, there's nothing wrong with setting a stop, a relatively tight stop below or trailing it up, because it may pop on through there, take out the trend line and backfill the gap. But as of now, we're at gap resistance, and you're up 60-something% or over 60% where this thing was first mentioned just a few weeks ago. Not a bad time to take some profits, especially if you have exposure to the other stocks in the sector there. CPS, that's at the first target now, 258. Since the breakout, this one's rallied about 17-18%, and that is a pretty significant level. And it also has that 50-day moving average coming in there. If the market is going on to new highs in the sector, this one holds up. But I'll tell you, I favor at this point, I'll just be clear, I favor reaction off that level. We haven't had one yet, if it is headed up there. So, you might want to just at this point maybe raise stops somewhere around these reaction lows if you plan to let it ride. Otherwise, you can book profits and maybe recycle back in on a pullback. TOWR was another one. I cannot remember exactly where, but they were all, what was that, 2-3 weeks ago? So probably 15-16% as well. Still hasn't hit that $26 target yet, and I don't see much stopping it unless the sector loses steam all of a sudden or the markets come down hard, the broad markets. WPRT, same story. I can't remember exactly where this one was highlighted, but since the breakout here, it's had a nice run, and it overshot the first target. Looks like it's up about 40% or so since the breakout. Overshot that 183 target, but it's come back into it, and that's what I call a momentum-fueled overshoot. When you have a lot of velocity heading up to a resistance level or a target, you tend to carry, the momentum tends to often carry it through, and then you come back down. So there's our reaction. We're having it now. We're on that target, and it's still, still an objective time to book some profits if you want to. PPO is starting to roll over at high levels. This stock is overbought. Another one, why not? If you're in it, especially with such quick gains, take the money and run 30%. Book it and get out of that one. SUP, this one's also done nice, and it's struggling with that $6 target / resistance level, still there, up about 30-something%. If it pops it, it can head up here to $7. This one isn't nearly as overbought and a big divergent low. So, if the economy holds up in 2019 and the market's going well beyond the all-time highs, this one has the potential to go back here to 14. That would be more than a double from where we're at right now. Again, anything's possible, based on how the economic indicators are looking and where we're at. That's probably a stretch, but you know the charts are powerful in this one. That's a big divergent low, and so the potential's there. And how do you handle that? Well, if you want to hold out for the possibility it's going up there, just you could set a stop. I think at this point about 545. Well, 545, 550 is support, so maybe a little bit below that support level in case it comes back in. 540 down to 530. Again, all depending on your entry, and let it ride if you want. Otherwise, book profits and maybe recycle in on a pullback. Again, assuming that the broad markets are holding up and everything's looking good there. UNH, I told you one of my favorites for on the shorts, long-term short. It just continues to go down. Now it's hit the first target, so that's certainly support. Here's a support zone. We're at the bottom of that right now. Potential divergence, but not confirmed. So again, this is called an unofficial trade, but if it takes out that 209 level, and I still do think it's coming down here, it's just a matter of do we get a reaction first or not. Netflix still under consideration. I'm still watching. It's back testing that trend line that it broke just before earnings right now, so I can tell you it's an objective short here. Kind of really depends, I think, on what the broad market does. As long as there's this risk-on trade, it will provide headwinds to a Netflix short. Let's just take a look at the broad markets one more time before I wrap up this video, see what QQQ has done since. See, QQQ is sort of, they're recovering. So I imagine that IWM and SPY are recovering too. There it is. So far, so good. Yeah, like I said, I'm just going to wrap it up here, guys. I can talk and talk and talk all day, but nothing technically significant has happened. That was a pretty impulsive reversal this morning. Maybe it was headline driven. I'll probably find out after I'm finished with this video. But here's the story. And you know, I know it seems like I seem like a broken record here, wedging up with divergent highs. But as long as the divergences exist, particularly here on the daily chart, this I think is a powder keg just waiting for a spark, and that spark would be a break of these trend lines, and then you know, hopefully if we get some good sell signals, I can get those, you know, some official short trades out in time. If not, don't fight it. This thing's going up and there's absolutely zero sell signals. I'm watching. I get a lot of comments too. I see a lot of buzz in the trading room. A lot of you guys are trading the semis. No sell signals yet. Here's a potential doji forming. Divergence, at least on the PPO, not so much on the RSI anymore, except we're extremely overbought. You know, you get overbought like this. You can see what happened last time we were very overbought. There was a big drop right here. We were overbought right here, big drop right here. And we were overbought here, big drop here. It's the odds. Play the odds. Oh, and then, of course, I missed one. Overbought here. And, you know, these look small, but they're, you know, from... Get away from that line here. Let's move that. That last overbought reading resulted in a drop of about 6% in just a few days as well, and that's a, you know, that's a very nice swing trade. If you can get 6% in a week, turn around and get out. So we'll watch this, but again, we're probably looking at a much bigger top coming when we get a, you know, a decent sell signal, and a lot like, I think, like the broad market. Let's see if we can draw a trend line. Actually, semis are well above that trend. We can maybe tighten it up there and say 2 whipsaw breakdown. So there's one trend line, and here's an alternative BOD, benefit of the doubt trend line for the semis. So I'll watch it closely, guys. I know a lot of you are, you know, have interest in SOX and SOXX and all those. Last trade was stopped out. There's still a bunch. I just haven't taken the time to update and move over to the completed trade archives, but this one's long since stopped out, the last one, and there it is. There's your potential divergence on the 60-minute chart. Look how overbought we are on the 60. This is an extreme reading of about 83 on the RSI, and no sell signals yet, but we'll watch for that. Maybe we'll get one soon. All right, we're going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.